Welcome to a strategic breakdown of Apar Industries and the Great Domestic Pivot. As we dive into the Q3 FY26 results, we see a company undergoing a massive transformation, with domestic revenue surging to 76% of their business, up from just 40%. Despite global risks being labeled as neutral, the company is showing a powerful 45% growth trend in key areas. How do you survive a 51% crash in your key U.S. market? You pivot home. While U.S. exports collapsed, Apar delivered a 16.2% overall revenue growth by leaning into a 30% boom in the domestic Indian market. This is resilience in action, proving the company can thrive even when a major trade partner falters. Let's look at the Q3 FY26 glance. Revenue hit 5,480 crore, up 16.2% year-over-year, driven entirely by domestic strength. EBITDA rose 20.4% to 483 crore post-Forex adjustment, while PAT grew 19.4% to 209 crore. Even the earnings per share saw double-digit growth, coming in at 52.01 rupees. Apar is growing more profitable, with EBITDA margins climbing 30 basis points to 8.8%. The catalyst here is a strategic shift to a premium product mix. Most impressively, the 9-month performance is historic, with total revenue reaching an all-time high of 16,299 crore. Visualize the shift. Last year, exports were a massive part of the pie, but this year, domestic revenue is the engine, growing by 30%. Export contribution dropped from 33.5% to 25.6%, acting as the anchor, with an 11.2% decline. This successful de-risking protects the company from global trade tensions. In the conductors segment, it's all about value over volume. Revenue reached 3,063 crore, but the real story is the EBITDA per metric ton. It saw a massive jump to 44,195 rupees from 29,000 last year. Even though volume dipped 5.9%, the shift to premium products, now 44.2% of the mix, sent value skyrocketing. The cable segment is a tale of two markets, the USA and India. While U.S. sales crashed 65.4% due to tariffs and trade issues, Indian sales surged 34.1% thanks to the local infrastructure boom. This domestic engine was strong enough to pull the entire segment up 7.6%. While conductors drive margins, specialty oils are the volume engine. Revenue grew 18.4% to 1,458 crore, supported by a 20.8% jump in volume. Domestic transformer oil grew 6.5%, maintaining Apar's status as the world's third largest producer in this category. You might notice a 25 crore exceptional loss this quarter, but don't panic. This was due to provisions for the new labor code regarding gratuity and leave encashment. It is a non-cash accounting impact for past service costs. While it lowers reported PAT now, the underlying operational health remains untouched. The core thesis here is premiumization. Apar is focusing on value over volume, with their premium conductor mix now 37.4%. This resulted in EBITDA per metric ton surging 49.3%. Simply put, Apar is selling better things, not just more things, which defends margins against raw material volatility. The road ahead looks clear, with a total order book visibility of over 9,000 crore. Conductors make up 7,396 crore of that, with 32% dedicated to exports. Additionally, the company's net worth has grown to 4,463 crore through steady accretion from retained earnings. What could go wrong? We have to watch U.S. volatility, as that 51% revenue drop is a massive gap to fill, and tariffs remain a threat. Geopolitics also play a role, with freight tensions pressuring export logistics, while new regulatory labor codes could increase employee costs further. The bull case rests on three pillars. First, the domestic hedge, where India's infrastructure boom offsets global weakness. Second, market leadership, as Apar is the world's #1 aluminum conductor manufacturer. And third, premiumization, through a successful premiumization strategy. The final verdict is constructive. Apar Industries has proven it is not a one-trick pony. By absorbing a massive blow in the US and still delivering double-digit growth via India, management has validated their strength and the success of this strategic pivot. If you enjoyed this deep dive into resilient stocks, make sure to like and share this breakdown. Subscribe for more smart investing insights and follow ZinvestZ to stay ahead of the market. Thank you.